Hello, I am Alice Antonelli, a Director of Advisory Services here at Nonprofit Finance Fund. In this video, we will briefly highlight a FASB accounting update regarding leases that will most likely affect you and most other not-for-profit organizations. We'll talk briefly about what is happening regarding the lease update so that you can have a clearer picture of what to expect. First, we need to define certain terms. A lease is an agreement transferring the right to use property or equipment, typically for a stated period of time. A lessee is the party that gets the right to use the asset. A lessor is the party that is the owner of the asset, but leases it or rents it out to the others. Most of us are familiar with these terms. If I'm renting a building or a vehicle, I am the lessee. I am the one that gets the right to use the asset. If I am the owner of the building or vehicle and rent it out, I am the lessor. Now, let's look at the difference between a capital lease and an operating lease prior to the FASB update. There are certain characteristics that help highlight the difference between capital and operating leases. You know you have a capital lease when there is a transfer of ownership at the end of the lease, like a lease-to-buy arrangement, or the lease term extends for the majority of the useful life of the asset. The lessee not only assumes the risk of ownership, but also the benefits. Now, on the operating lease side, you know you are in an operating lease when you are simply paying for the use of space or equipment for a stated period of time. That time period is typically shorter than the useful life of the asset, say 1 night to rent out space for a party, 3 years for a vehicle, or 10 years for office space. You do not have the risk of ownership. So for instance, most often the landlord or owner of the equipment will fix and pay for major repairs. Likewise, you don't have the benefits of ownership. For instance, you don't own the property and cannot participate in any increase in market value. Because of the ownership-like quality of capital leases, they are recognized as assets and liabilities on the balance sheet. Amortization and interest expense are recorded on the income statement. This is similar to debt financing used to purchase a building. You can see that on the slide, both balance sheet and income statement are represented under the capital lease. Operating leases were not recognized as lease assets or liabilities on the balance sheet, though lease expense is recognized on the income statement. And you can see that just the income statement is represented here on this slide under operating lease. Now, this is a lot of words on this slide, and I would encourage you to use it as a reference later, but as a recap, under the old guidance, a capital lease is more like a loan. The asset is treated as being owned by the lessee, so it stays on the balance sheet. Think of a capital lease like owning property. In contrast, an operating lease was treated like renting. Payments were considered operating expenses, and the asset being leased stays off the balance sheet. The accounting treatment for capital and operating leases was different, but now with the new FASB update, the treatment will be more similar. So why the change? Well, the vast majority of leases were operating leases. In fact, in 2005, the Securities and Exchange Commission, or the SEC, issued a study and found that the largest off-balance sheet financing transactions were actually operating leases. They estimated the amount to be $1.25 trillion. The SEC was interested in capturing the value of these lease obligations and their assets on the balance sheet, and thus FASB began its work on updating the standard. So what's changing? A capital lease will now be called a finance lease, and that's it. Operating leases will now be recognized as lease assets and will also recognize the obligation as a liability on the balance sheet. Lease expense will continue to be recognized on the income statement. You can see that now both the balance sheet and the income statement are represented on this slide. So when will this update occur? Starting on January 1, 2020, nonprofits must begin reporting operating leases on their balance sheets as lease assets and liabilities. So what does this mean for you? FASB hopes that this update will require many to recognize lease assets and liabilities for operating leases where they had not before. They're also hoping that this will improve the understanding of a not-for-profit's financial commitment, regardless of how it finances the assets that it uses to operate its business. FASB's hope is that this update will help you tell your financial story more effectively. If you're interested in learning more, please check out the Learn section on our website at nff.org, or you can contact us at consulting@nff.org. Thanks so much for listening. Goodbye.